Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 12th of August. Starting off with 7 Digital, which the last time I looked at it was on the 31st of July, around, I suppose, 0.4 pence. It's done rather well since. We had a little bull flag there in the meantime, and breaking 0.5 pence as we did on an end-of-day close yesterday. Obviously, somebody was rather keen to buy the stock yesterday, led to where we are now. We've broken the two targets that you could have had. Well, the first target from last month was 0.8 pence, which seemed rather ambitious. Next target, the top of that channel from January, around 1.1 pence. And at least while we're above 1.1, we've got the upside, hopefully, to continue. Best case scenario target here, which obviously only rather brave people will go in now, is up to 2 pence at that November resistance line projection. But let's see what the retracement is, if there is any, ahead of a potential move to that level. Good to see the next stock doing well. I've interviewed the company a couple of times, Lord Lucan, etc. We've got the current situation was actually quite interesting in the sense that we've gapped up, the shares gapped up last week through the 50-day moving average, which regulars of the Bulletin Board Heroes is one of our favorite setups. Has worked in this case, and I call it the rocket launcher. So it has actually launched at least today. Interesting to see now whether we can clear the main 1.2, 1.3 pence resistance on the chart. If we can, then the target here would be towards the top of the December price channel there, up to 1.6 pence. But obviously, the shares have come up, or come down a long way over the recent past. So if we can get through the 1.2 area, there could be rather more upside than that, potentially up towards 2 pence, which is obviously where the shares were in July last year. Stop loss on the bull argument at the moment, back below the July peak and initial August peak at a penny even. Stock which I was looking at, I think around the 10 pence area for the first time in the current sequence. It took a long time to get off the ground, but we broke through for the first time early last month, breaking 12, 13 pence, and gapped higher and have gapped again. So this is obviously looking like quite a strong situation. As far as what might happen next is concerned, while we remain above the July peak at 28 pence, looking for a best case scenario target over the next month or so, up towards that late November resistance line projection as high as 55 pence. So quite an explosive situation looking there, in order there. Next company which announced a decent update today regarding purchase of some gold assets. Here we've got Empire Metals rally to fill that gap through to 3 pence and come back there. Hopefully now we'll find support around the 20-day moving average area, 2.25 pence. If we can do that, then one would expect a retest of 3 pence and perhaps as high as 4 pence at the top of that rising trend channel from February. At this stage, really only back below 2 pence on an extended basis would really hurt the bull argument. We bounced off that area plenty of times, or the floor of this rising trend channel plenty of times at the turn of the month. So it looks like the testing should finally be over, testing for support, that is. Decent stock in terms of the recent price action comes in the form of Galileo. There's an announcement from the company today, so quite timely to look at it now. Good price action today, and the recent candles looking pretty strong as well. We've got that hammer just a few days ago, so that does suggest that we're in a sort of cork in water type situation versus the 0.8 pence level. End of day close above the initial August resistance at 0.88 should send the shares on to the technical target here at the top of that rising April trend channel as high as 1.4 pence. Only back below the 50-day moving average at 0.75, really hurting or delaying the upside on that situation at Galileo. Mobilityone's the next situation. People obviously got into a bit of a frenzy after that spike towards 60 pence last month. Some of them are still looking for a retest of that, and it's not looking too bad in terms of a retest of last week's resistance at 23.75 pence. End of day close today above yesterday's high at 15.8. Could or should give us a retest of that area relatively soon. Big plus points here at the moment, the way that all the near-term moving averages are rising, and support has been found at or above the 20-day line, which is normally a sign of decent bullishness. A new name for the sequence today, Osirium Technologies. Here we've had a break of the near-term triangle, so the triangle in place since March. That resistance line and the 50-day moving average being broken today. While we can stay above that resistance line at 20 pence on an end-of-day close basis, looking for an initial target here at 25 pence over the next week or two, and best case scenario target over the next month or so, or a month or two maybe, is at the top of the broadening triangle from November, as high as 47 pence. Stop loss really, I suppose, back below 15, 16 pence should cover it. We don't really expect to see the shares hold below 20 pence now for any considerable period of time. More stake building reported at Pires today, and so worth having a look at the charting situation. Interesting to see here how the shares have found support at the floor of the rising trend channel from the end of last year, from November, on repeated occasions. That uptrend line currently at 3.2 pence, so above 3.2 we're in bull mode. Decent end of day close today above 3.5 pence, and the 50-day moving average should allow the shares to finally progress towards their previously called target up to 7 pence. Obviously, we had a full storm there towards 4 pence bull trap through the 50-day line at the turn of the month, but should be second time lucky for Pires, especially given the way that the 200-day line, currently just below 3 pence, is starting to rise, and we've had a bounce for the RSI off neutral 50 to leave it at 52. Didn't really want to look at the next stock, but here it is. Rosslyn Data. The reason for the inclusion is that we've broken the near-term triangle here at around 5.6 pence. That's happened after many attempts to break this area around 5.67 pence over recent months, so it should be fourth or fifth time lucky. Above 5.6, looking for the top of the rising trend channel from December up to 8.5 pence, and the upside value really while we hold above the April support line there at 5 pence. Scancell is next, and here you can see that the shares broke out of one triangle last month around the 5.5 pence level and delivered a reasonable rally. Now there's another triangle break around 7.1 pence, and at least while we're above that resistance line there from last month at 7 pence, and the support line as well, obviously. We're looking for further upside here. That could be as great as the December resistance line projection, currently pointing at 12 pence. Big figure target, I suppose, up to 14 or 15, which is the top of the overall triangle from the beginning of last year. But let's take things one step at a time for Scancell. Finishing off with TomCo, another stock which people seem to get excited about. Some reasons for getting excited today. We've got the near-term moving average is starting to converge there. Good support there at 0.8 pence, which was resistance for the second half of last month. So really, while we're above the 50-day moving average, looking for a retest of last month's resistance at 1.4 pence. And the ideal scenario is that today we get an end-of-day close for 0.9 pence and above, which is the initial August resistance. That should hopefully then steer the shares higher relatively quickly. That's it from me today. More updates tomorrow.